Hello again, fellow BeachBum traders. Thank you for joining us for the live stream for our weekly trading game plan for the week of June 27th through July 1st, preparing for the coming recession. So we've been talking about for a while that we believe we're actually in a recession already, and you heard Powell is starting to acknowledge the potential for a recession as well. And we're going to try to help you all prepare for this. Let's position our portfolios so that they're recession proof and hopefully actually may make money based on the changes in the business cycle. Good morning, Spacula. Good morning, Walter. Thank you for joining us for the live stream today. Hope you all are doing well. I hope everyone had a happy Father's Day, had a good Juneteenth long holiday weekend. So we'll go ahead and get started. So again, you heard Jerome Powell, you've heard a lot of the talking heads. They've been talking about a recession, the fear of a recession. It caused a lot of the decline in the markets, etc. I wanted to first talk about, what is a recession? How is it defined? How do we know when we're in one, etc.? So I have this link in the notes. I'm going to also add it in the pinned comments underneath this video. And I wanted to quickly go through this definition. It's a really good guide for what is a recession? What does it mean? How does it measure? What are the inputs? So again, from Investopedia, I will put this link in a pinned comment below, and we could see, what is a recession? The definition is 2 consecutive quarters of economic decline. Now, we've already had one quarter where it was reported that the economy shrunk. So it was an economic decline. We haven't gotten the numbers for the second quarter, but I very much suspect that will just confirm that, yes, we have been in a recession already. So again, this is a lagging indicator where they're going to tell us we were in a recession after we've already been in one for essentially 2 quarters. So you can see a significant decline in economic activity, declining economic performance. It lasts for several months. So again, a recession, they last for different periods of time, but we're talking about several months. The recession of 2020 was an exception due to the pandemic. It was the shortest in record. I think they measured it only to be 2 months. So, what do we see in a recession? Well, decreased economic production, decreased employment, decreased retail, negative GDP growth. Here they're talking about this, the 2020 was the shortest. So here's the expansion. So the last expansion, they say, ended in the pandemic. So technically, we bounced out of that pretty quickly. And again, this is a normal part of the business cycle. So again, we go into expansion, we get to a peak, often there's a bubble, the bubble bursts, we go into a recession for some period of time, and then we come back to expansion. And again, this article is, I think, excellent. I would highly recommend you read it in more detail. I'm not going to belabor it too much, as you can read that. They talk about pain, higher unemployment, distress, widespread unemployment. Okay, and another important thing is the predictors. So what's the data that's going to tell us that a recession is coming, that we're in a recession? You can see these PMI data, and we had some PMI data, and we've got some more PMI data coming out. Also, the leading economic indexes, treasury yields, and again, we've had these inversions in the treasury yield curves, and again, those are typically indicators of a coming recession. So the bond yield's been telling us, the risk of a recession. We're probably headed to a recession, and I think we have been in one, and we're headed into confirmation that we're in a recession. So another thing that you want to watch for is this consumer debt. You can see it's been growing. It's continuing to grow. Eventually, again, we've talked about, I think the consumer, they had a lot of savings from the pandemic, but I think they're going to exhaust their savings. They're going to spend every penny they can get their hands on. And when that ends, then I think we're headed for the crash into the recession. Um, and then there's more talk about a depression. So again, I'll leave this article. You can see. So again, for our strategy, for our game plan, what are we expecting for a recession? Well, we're expecting a decrease in production, decrease in GDP, decrease in economic activity, decreased spending from the consumer, etc. And you know, shrinking of the economy and increasing unemployment. So those are the factors we want to position our portfolios for, so it doesn't hurt us. And also, what are the things that are going to benefit from an environment like that? So we'll talk about that. So please let me know if you have any questions, comments about that in the comment box below, in the chat here today. We can talk about that more. Again, we're going to be looking for those indicators that confirm the coming recession, and hopefully will give us some indication as to, how long is this going to last? When's it going to hit the hardest? Again, I think the consumer debt is a good indicator. And we'll see some of the PMI data is already starting to roll over and indicate that we're in a recession. So now we'll start looking at the market from last week. Again, we saw Friday was a nice green day. We had a nice rebound on Friday. Hopefully y'all did well. Again, I think that was, a rebound. We'll look at the indicators to see if we're coming out of this bear market or if this was just a bull rally in a bear market. But we can see everything was, nice and green on Friday, but we see there's still a lot of weakness under the covers. So the vast majority of stocks are still below their 50-day moving average and still well below their 200-day moving average. So again, those are indicators that, we're still probably in a bear market. There's still a lot of weakness. So again, be careful. Don't get what they call a bear or a bull trap. So what you'd expect to change when we confirm. When they confirm we're in a recession, I think you're going to see some people are going to react. Again, I think we're already in a recession. I think most people know we're headed into a recession, but your populist people are gonna panic. And last week, as we talked about, BeachBum traders don't panic, and we don't want you to panic. Now hopefully people will start to recession proof their portfolios, recession proof their lives, their income, etc. If things are going to slow down and unemployment's going to go up, people should be saving. They should be making sure that their career is positioned. I won't talk about that too much, but I hope everyone has, a side gig, a way to generate income. If you lose your job, I would always advise that. And we do have another channel called Virtual Consulting that is a way for you to do that. So again, I won't belabor that in this video. But I hope that answers your question, Walters. I expect once they confirm it, we're going to have a mild panic, and then people will adapt accordingly. And again, that's one of our themes is adapt to the market, adapt to the economy you're in, and figure out how to protect yourself and hopefully thrive in that market. So you can see the news is recession, recession, inflation. You heard a lot of talk with Powell about inflation, whose fault is it, etc. And I'm not going to belabor that, but he is starting to confirm that, yeah, there's the possibility of a recession. I interpret that to say he's starting to position people for the coming recession. So we see oil had come down, bounced up a little bit, but it's now down below 110. We saw a nice decline in natural gas. We'll see in the futures it's been declining now. And welcome reigning Charmandes. Sorry if I slaughtered that. glad to see you. Thank you for joining us. Yeah, I agree with that rating that, we're primarily swing traders. So, we spend most of our time doing analysis, market analysis, stock analysis, etc. And I agree. I believe that it's in that analysis where money is made. And you'll find that in our weekly trading game plans. We're gathering all the data, the strategies, where are we at, where do we want to go, and then tomorrow we'll pick the particular stocks to put on our watch list to follow those strategies and this market data. So thank you again for joining us. Glad to have you. We see gold's been kind of oscillating, bouncing around 1800. We'll see. There was a nice collapse in the other commodities, and we see the futures are pointing up right now. Also, we see the treasuries. They had come down a little bit. Now they're still up in the threes. There's a little bit of an inversion right now. We'll talk about some of the impacts to that. So, and again, this is FinViz. You'll see I use FinViz a lot for a lot of analysis, a lot of our due diligence, etc. You can find our affiliate link for FinViz in the description box below. And yeah, go get your woodpecker SPAC. Yeah, we've got those around here too. So now let's look at the indices. So here's the SPY for the week. So we saw it was in decline, made a little bounce. I'm going to zoom out to the weekly so I can see. We can see it bounced off that declining trend line. So, and we can see it's in a declining channel. So again, the markets are still showing that they're in decline. Try to make this little gap fill, but again, things are still looking like the market is making lower lows, lower highs. So we're still in a bear market as far as I can tell. Until we have a sequence of higher lows, higher highs, we can't really say that we bottomed and we're pulling out. I don't see any confirmation of a bottom. So again, this is very likely a bull rally and a bear market. So again, be careful if you try to play the upside. Again, these bull rallies and bear markets can be pretty violent, pretty dramatic, and then it's going to roll over. We see what happened the last time. We had a dramatic upside and then a rollover and then a gap down. So again, be careful. Cues. So again, the NASDAQ, very similar. We see that, gap, bounce. Again, that's not unexpected when we had that gap down to have a bounce, but we'll have to see if we get multiple days of upside or if we go straight back down again. It would not be surprising if we rolled over pretty quickly. So the Dow, DIA, again, very similar. You can see there all of them are below their moving averages. So again, we're still in a declining bear market as far as all the indicators are showing us. So we should play accordingly. And we've been having our strategies positioned for quite some period of time as to how to make money in a bear market. So again, the Russell, very similar. We'll look at the VIX very quickly. The VIX actually declined. It settled down quite a bit, and it's retracing, reverting to its mean right down. So it's below 30. It's dropping off unless we get some data, some event to cause it to spike back up. There isn't anything immediate that would cause that other than some of the inflation data, etc. But I don't expect a dramatic spike at this time until, even the next Fed meeting in the middle of July is pretty well expected. We're going to get a 0.75 rate hike then. So I think that's pretty baked in as well. So let's look at the groups and industries, see if we see any opportunities there. VIX maybe to 25. Yeah, it's going to keep coming down unless something props it up, which again, we've got a little bit of inflation data, etc. So we might get a little pops, but right now it will naturally revert to the mean. So it's going to keep coming down right now, at least to, this level. Now, if it will drop down to 20 or below, I don't know. We've still got a lot of fear, a lot of volatility in the market. So I don't know if we'll get back down lower than that anytime soon. But okay, so if we look at the sectors on the groups tab in FinViz, and again, we've got videos that go into more detail about how to use these various tabs in FinViz. So I'd recommend you check those out. We see everything was green on Friday, so that's not terribly helpful. We're also seeing, and this is what you'll see in this, is a sector rotation. So the sectors that were outperforming are now underperforming a little bit, and the ones that were underperforming got the biggest boost. So we see, energy basic materials were outperforming, and now they're the underperformers for the week. So again, I see that as a sector rotation. People are taking profits in the sectors that outperformed, and they're putting them in the underperformers. And I think, we're going to continue to see this type of rotation. So again, we see technology, consumer cyclical, and again, these are not very good recession-proof sectors. Again, I think this is purely a sector rotation. People are taking profits in the sectors that were outperforming, which we saw for several weeks. Energy, basic material, utilities were the outperformers, and now they're the underperformers. And they're putting them into the ones that were the most underperformed. So it's kind of what we'll expect until these start to peak out and roll over. And then again, you'll see more of a flight to safety and getting into defensive utility healthcare. You see that's the longer term trend. So short term, again, you can play this momentum in the sector rotation, make some good money in the sector rotation. Just when it peaks and rolls over, be ready to move into whatever the next sector is that is going to attract the money. So again, we saw, some unusual ones, entertainment, resorts, casinos, travel. Again, these were all underperforming. Uranium, we talked about uranium last week as an opportunity. I don't know if any of you caught any of the uranium stocks that we had on our watch list from last week. I did not. I missed that bounce, but we'll see if we get another crack at it. Yeah, yes. Out of energy, oil, gas. It's oil and gas been pretty volatile. We'll see that. We still have an old position in gold, and I was just answering a question from one of our other BeachBum traders in our Discord about their cold position that they've been holding, and eventually those positions are going to be profitable. Natural gas is going to come down. Um, in fact, I was talking, down below the $5 level at some point eventually. I just don't know when. And I would like to be able to get long again going into the winter. So if we get a bottom in natural gas sometime this summer, fall, and can go long into the winter, that would be using Boyle, for example. That would be great. And hey, welcome. Mighty Soldiers Trades. Glad to have you here. I think this is the first time I've seen you in the chat. I know we talk a lot on Twitter and Discord, and Mighty Soldiers is great. So he also has a Discord. We have our link to Mighty Soldiers Trades Discord on our BeachBum Trading homepage. And I'll bring that up and show you all where to find the various links on our homepage, etc. in a second. So I'll bring that up and then we'll continue talking about industries. So again, we were talking about uranium, and I think, that it had a pretty nice bounce. I think there's still opportunities. If we get a quick retracement, I would pick up some of these uranium stocks. You saw oil and gas been volatile. We zoom out a little bit more. Again, we see real estate, some software, some biotech. Solar's been strong lately. Again, the energy sector is going to be strong, but you're going to see profit taking. So copper is one we're going to look at in the futures in just a second of the decline in copper, and I'll leave my commentary about that. Also, just a reminder is these notes are in a Google Drive, public Google Drive folder, and the link to that Google Drive folder you can find in the description box below. So you can access these notes and refer to them going back. So yeah, Mighty Soldiers Trades, we do. We have got a great group here. And again, glad you're joining us. And again, you can find these notes in this public folder, has all the links, etc. Here's our homepage, beachbumtrading.com, bum without the U. And if you go down to the links section, you'll find links to all our social media, all the tools that we use, etc., business resources. And again, you can find links to some of the other Discords that we hang out in, and there's Mighty Soldiers Trades. So again, another great group of traders to hang out with. Maybe Mighty Soldiers Trades can comment on his style of trading. I believe you're more of a day trader than we are. We're more swing traders. So if you are more of a day trader, he may be able to help you out, and their group may be able to help you out. Another good group for day trading that's been very helpful is Beginner Trading. John from Beginner Trading has also a good Discord and also a good YouTube channel with good content for day trading. So, well, again, all we would recommend all those groups. We all try to help each other out, help each other succeed in our trading careers, and that's our objective. The whole purpose we started this, and that is what we're trying to achieve. So now let's talk about economic data. So Monday, again, markets were closed for Juneteenth. Hope you enjoyed your long weekend. Tuesday, we got some home sales data, and what you'll see is actually existing homes. It was a little better than expected, but it's declining. So existing home sales, and we've been talking for quite some time that about the rollover in housing and residential housing. So that's not surprising. It's consistent with what we've been saying for quite some time. So existing home sales decline. We'll see coming down a little bit lower. That new home sales is still kind of strong. But again, those were purchases that were previously made. They had a backlog. So we expect that to roll over a little bit later. So. And then Thursday, we got some jobless claims data, and you can see, although it was continuing jobless was as expected, it was higher. So, and then initial was higher as well. It was higher than expected. So we're starting to see that increasing unemployment. Again, not surprising. We're headed into a recession. It's going to be, slow as companies we talked about for quite a while. Step one is they're going to, remove open job postings. Step two, they're going to lay off and, well, step one is they're going to hiring freeze, then they're going to cut open job postings, and then they're going to start laying off. And we talked about the domino effect of, watch for a company that has decreasing sales and they start laying off, and then the impact on their suppliers, etc., because obviously then they're going to have decreased sales and they're going to have to lay off. So, several weeks ago, we already started talking about that domino effect. So. Good morning, Tanvir. Thank you also for joining us. Glad to see you back. So then we also had, you can see jobless claims is higher. Again, we expect this to continue. Unemployment's going to go up. And you heard Powell, they're much more concerned about killing inflation now. They're focused on inflation versus unemployment. So we expect unemployment to continue to go up. So, and then here's some PMI data. So this is some indication that the inflation is possibly, this is manufacturing and producers. So this is the input data, and you can see that's decreased a little bit. So down is good from an inflation standpoint. So we can see, the possibilities that inflation will eventually come down. This is, at the front end of the supply chain, so it's going to take a while to trickle through. But, inflation should at least abate over time. So we'll see. We'll keep an eye on that data. Then we saw natural gas storage pop up, and I believe that was a trigger for the decline we're going to see in natural gas, which is good. And then we got this consumer expectation of consumer sentiment data on Friday, and it was the worst ever. So the consumer is their outlook is the worst it's ever been going forward. And you could see inflation, high inflation, and again the worst consumer sentiment we've ever had. So the consumer's not feeling good, not happy. One would expect them then to not spend as much. But again, we still see them out traveling like crazy, still buying stuff. So we'll see when that maxes out and rolls over. I'm trying to keep up with the chat a little bit. So let's look at what we've got coming up next week. And I'm going to jump over to the link in investing.com. Again, this link is also in the link section on our webpage. Has the economic calendars, the earnings calendars, etc. So as you see in the Discord too, I typically grab this data and we post it in the Surf the Market Reports channel in our Discord. I'll take a screenshot of the graphical view so we can see the reds and greens. And then I also post the raw data and put it in our notes as well. So Monday, we've got some durable good orders. Now, you heard Powell say that them raising interest rates, they expect it to affect durable good orders. So we expect those to come down. So companies that are selling durable goods, you would expect decreased sales due to the rising interest rates. So, cars, appliances, homes. Now, one of the things they didn't really talk about with homes that we will consider in our recession proofing is if people are buying fewer homes, there are a lot of things that people also buy when they buy a home. They buy furniture, they might do home improvements, they buy appliances, etc. So decreasing home sales also is going to impact those other businesses and sectors. So it's something to consider, when you're picking companies to buy. If decreasing home sales, are they going to be impacted by decreasing home sales? So, excuse me a sec. So Tuesday we're going to get some housing data. So again, this should confirm, the rollover in housing. We don't expect house prices to come down anytime soon. But sales will probably decrease with the increasing interest rates. And we got mortgage data on Wednesday, so again, more housing data. And then we've got GDP data for Q1, so that should tell us more, about the recession. So, and we've also got PCE prices. So again, this should tell us where we stand relative to the coming recession. How close is it? Are we already in it? How deep are we in it? Travel data is pretty wild. Yeah. Well, and there are a lot of cancellations. So there's a lot of problems in the travel industry. So I don't like the travel industry. I think it's going to max out. And again, as we're going into, I think the summers it's going to be maxed out. People are going to travel. They're having all kinds of cancellations. They're going to max their profit. So for the summer, they're going to do real well, and then probably for the holidays, they'll probably do well because again, people will just spend whatever just to travel for the holidays because they weren't able to for years. But a lot of those companies have huge debt. They're losing tons of money. I don't like it long term. So again, short term might be okay. You're going to see swings. We saw cruise lines swing back up, but again, long term, I don't like them. Again, they have huge debt. They're zombie companies. They can't even service their debt. So I would not be surprised you saw some proposed consolidation. What was it? JetBlue was going to try to buy Frontier. Oh, JetBlue and Frontier were trying to buy Spirit. They were competing over Spirit. I think they have to consolidate for survival and also to get enough pilots. So yeah, I would expect some consolidation. You might see somebody buy, the most solvent of the cruise lines might buy the least solvent, as long as their debt burden's not too high. So Sonia and I were talking about that. You might see Carnival, for example. I'm just using this as an example, but you might see Carnival get bought out by somebody like Holland America or something. And again, if they can't survive and they're smart, they'll get bought out quickly. So again, love to hear y'all's opinions as well. But again, we were just talking about that the other day. So Thursday, again, we got PCE data, again, more recession inflation data. So again, we might get some volatility out of these numbers if they're different from expectations. So be prepared. Also, ISM manufacturing. So we've got a lot of inflation and recession related data this week. Almost every day this week, we've got something. So that can contribute to the volatility. Yeah, yeah. I'm not. I I'll listen to all the Powell talks, Tanbeer, and I'm not going to comment too much on the political stuff. I try to stay out of the politics as much as possible. The reality is, and you heard him state this multiple times. They have to get price stability, and that is their number one priority right now. Again, there's a lot of other political reasons why they need to kill inflation. So that's their focus. Is they're going to try to do everything they can to bring inflation down. Now, again, raising interest rates is not a very quick way to curb inflation. You heard it affects durable good purchases, but it doesn't bring down gas prices. It doesn't bring down grocery prices. In fact, they don't even consider those things in core, what they call core PCE. So I just wanted to show you again, we tend to capture this data as it's reported. We put it in the Surf the Markets channel in our Discord. So keep an eye on this channel in our Discord. Also, any earnings calendars, etc. We'll try to post that as quickly as possible in the Surf the Markets channel on our Discord. And if you're not already in our Discord, you can find the link for the invite in the description box below and on our website, etc. So we talked about the economic data for the coming week. Earnings calendar, again, you can see the earnings calendar also in investing.com. I'm not going to belabor it. There are some interesting earnings coming out. I think Nike's early in the week, and then there's some others. Yeah, there's Nike, etc. So again, these will tell us the health of retail. You can look in detail in the earnings calendar here. Keep an eye on it. There's also been discussion that some of these companies may start pre-warning on their coming earnings. If they think they're going to miss significantly, they're going to come out early and they're going to tell you they're going to miss, and then they're going to get hit. So listen for that, and also sympathy plays based on that. Paul Volcker, yeah. Yeah, and they're saying, there's a lot of discussion that Powell may have to Volcker the economy. He may have to really dramatically increase rates in order to get inflation under control. So, we've been talking about inflation proofing and recession proofing your portfolio for quite some time. Hopefully, you're in a good position, but yeah, we would not be surprised for interest rates to continue to go up quite dramatically. So now we'll jump over, we'll look at the markets and Webull just real quickly. So I'm on the markets tab in Webull. I'm on the online browser version of Webull. Again, Webull's still offering their 6 free stocks. So if you don't already have Webull, again, you can get 6 free stocks by opening and funding a new account with Webull. First 2 on opening your account are up to $300 each. And the subsequent 4, when you fund the account for any amount, are up to $3,000 each. And as you all probably know, Webull is our favorite trading platforms where we actually do the majority of our trading. So if you're not already using Webull, you can get your 6 free stocks, even if you just cash them out. And again, Webull's our favorite trading platform. And we have a whole video about how to use this markets tab. I particularly like a lot of this data. The histogram's very nice, so we can see the distribution of decliners and advancers, not just the number. And we see a nice distribution. We had significant advancements, not a lot of severe decliners. And for the first time in quite a while, we saw higher inflow in the NASDAQ. It's been quite a long time since we saw more inflow in the NASDAQ than in the NYSE. So that's interesting. Again, that shows us that there's a rotation back into NASDAQ tech stocks. Now, how long that will last, we'll have to see. But again, as we've talked about for quite some time, and part of the recession proofing of your portfolio, if you read that article, unprofitable companies are risky. So your unprofitable high growth tech stocks, if they're not profitable, that's pretty risky. So let's look at the best performing industries. This will be very similar to the sectors we saw in FinBiz. So we see renewable energy was good. Biotech actually got a bounce. Again, this is a rotation. Biotech been beaten down for quite some time, and we saw it got a bounce. Autos got a bounce. Finance got a bounce. So all these that were underperforming. The utilities still did pretty well. Home building and construction actually did pretty well. Pharmaceuticals. So yeah, again, there's a sector rotation. Those things that were underperforming got a little bit of a bounce, and we'll see how long that trend lasts, but be ready for the money to flow back out as those peak up. So we'll look at some of the ETFs. So right now up on the Dow, long bull on the S&P, up on the S&P. Nothing strong on the VIX. Small cap bull up on the Russell. And again, we're going to see pretty much everything was green because this is going to be Friday. So basic materials very strong, uranium very strong, oil and gas, yep. Consumer cyclicals, again, that was a rotation. Consumer staples, consumer defensive, real estate, and actually financial services that have been underperforming for quite some time did pretty well. So soft. So this is interesting because we're going to see cotton. A lot of the commodities really fell off. So I'm surprised we see such a positive performance in those. And you can see very short-term bonds. Although the bonds did have a bounce, again, a kind of a flight to safety that was kind of unusual. The dollar was very strong as well, we'll see. So now let's jump over to the futures. Again, this is the futures in FinViz, and again, we have a whole video on how to use this futures tab in FinViz, and our link to FinViz in the description box below. I like to use this a lot to kind of, keep an eye on where things are going. We see this pop in all the indices on Friday, a little bit of an uptrend. We see it hasn't, it's still got quite a ways to go to reach its higher peak. It's kind of gap filling. See that on all of the indices. Same way with the Russell. There's the decline in the VIX. Okay, so here's the drop off in oil. So we can see oil had a little bit of a bounce on Friday, but it definitely rolled over and is in decline. So, and we could see it's got a little bit of a shooting star type of behavior on top. So this is probably just, a little bull rally, and I would expect a continued decline. We saw the nice fall off in natural gas. It had a little bit of a pop, but it looks like it's declining. So, we're going to ride that down with our position in coal. Again, these energy stocks are pretty volatile. So if you're day trading, you can ride the momentum in whichever direction it's going for the day. Just realize what the overall trends are right now. They're down. See, gold's just kind of been pretty flat lately, although we might be getting a little bit of a pop in gold, silver. And then we see this dramatic decline in copper and some of the other metals. And we'll see this in several of the other commodities. And copper, you'll hear Kathy Wood and some of the other people talk that copper is a very good indicator of the economic activity. And the fact that it's declining so severely is another indicator that we're headed for a recession, because this says the economic activity is declining. Copper is used in a lot of, building, etc., a lot of production. So if production is going to decline, building is going to decline. Often you see copper as a leading indicator of that kind of decline. So again, I take that as an indicator of that we're in a recession, or it's very, very close. And we saw all these other commodities fell off. And I found another interesting ETF I'll talk about tomorrow that covers some of these other agricultural commodities, because I was looking for some way. Now, if you zoom out on these charts, they look like they're at a low point, but it's really not at a long-term bottom. So they still have ways to decline. Now, I don't have a good ETF to short these guys, but when they bottom, I think there'll be a long opportunity, particularly if the harvest in Ukraine is as problematic as they've been talking about. There may be another opportunity because these guys just really fell off. We also saw cotton fell off, and I think, again, that's more an indication of economic activity than the supply demand of those commodities. So, and we saw this odd bounce again in the treasuries, and again, we know quantitative tightening, the Fed's selling treasuries. So it's unusual. It's again a factor of just the demand and the U.S. dollar being strong. So, does anyone have any questions on the futures? Again, other than very short-term trading opportunities on a daily basis, I looked at copper several times, and although again it looks like it's bottom, there's a ETF COPX, but it's really not at a real low point. So if I look at that real quickly, and we zoom out a little bit, so on a daily chart it looks like it's bottomed, but if I zoom out a bit, you see it's still got a long way to come down. And the risk reward's not that great, 30 to 50. I keep looking at that and it's just not real attractive right now. So that's what I'm looking for is I want to see something at a support or a bottom with a 2-to-1 reward to risk ratio ideally. So I hope that helps. Tanvir, that one agricultural and a GRU, and I'm going to look at it tomorrow because I just added it, but it's I'm going to long it. It's a long ETF, and again, we can't really short in our retirement accounts. I do have a cash account. I have never shorted anything directly. It's something I would like to learn eventually, but we short using an inverse ETF typically. So I'm always longing something. If I want to short something, I'm longing an inverse ETF. So if you wanted to try to short that GRU, or there's another agricultural ETF, I believe it's DBA. I'll bring up our ETF spreadsheet tomorrow again. I've made some enhancements to it, etc., and we can look at that and whether it's also a shortable ETF. I can very quickly see if it's shortable. This is the one I'm talking about. It's grains, the grains ETF. And you can see it's still kind of high. So I'm not going to long it right now, but I want to add it to the database. And it is shortable and it's not optionable. So if you did want to try to short that one, you could. And you could see it's above its longer term moving average. So it might not be a bad deal for a short term trade. Okay, we've been talking about, recession proofing your portfolio and essentially preparing for the coming recession for quite some time already. And we've been adding to these notes. And so a lot of these topics we've talked about before, so I won't beat them too much. A couple additional points, and just to reiterate, we want to think about, what's the consumer going to do to save money in high inflation if they lose their jobs or hours cut. They're going to trade down. They're going to go to discount stores. They're, going to defer purchases. Anything that's a discretionary spend, restaurants, entertainment, eventually travel, how many streaming services do you need? Also, I can't remember if we talked about this before, but a recent survey came out and consumers said they're going to defer home improvements. Again, they probably spent a lot on home improvements during the pandemic. So your things like Home Depot, Lowe's, your furniture stores, decorating, etc., are going to decline. They're going to drive less, cancel vacations, stop discretionary spending. Talked about defense contractors and this ETF. I haven't looked at it lately, but that tends to be pretty, inflation-proof, recession-proof. And somebody was asking about acquisitions, and you have companies that have a lot of money, a lot of cash flow, your Apples, etc. They're going to do okay, and they might buy back their shares because there's essentially nothing better. Expanding into a recession is not a great idea. So they're going to hunker down. In fact, I almost titled this week's game plan something about hunkering down for the economic hurricane that's coming that we talked about a couple weeks ago. So companies are going to hunker down. They're going to preserve their cash. They might buy back shares. They might acquire companies that have something of value that they can get at a cheap price. So there is an opportunity there. And we talked about this, domino effect, chain reaction from layoffs. So watch out. When you hear a layoff, it's like, okay, which of their suppliers is that going to impact? They're laying off because their sales are decreasing, or they don't see growth opportunities like Tesla. And so who supplies them? Are they going to lay off next? And then again, with rising unemployment, we're just starting to think about, okay, if more people are losing their job, um, what companies benefit from that or are going to get a resurgence because of that? Are we going to see more self-employment going back to like the pandemic, to your Etsy's and Shopify's and your Uber Lyfts, et cetera, your eBays, et cetera, recruiting firms and headhunters? Somebody mentioned last week this company Job, that's a headhunting company, other gig work companies, temp firms, etc. We're starting to build our list of as unemployment increases, then what companies are going to benefit from that. And so, we'll start thinking about that. We talked about we went long Big Lots, I think a week or so ago. It's now profitable. And that was one of these trends of the discount stores versus the higher end retail. So if there are no other questions right now, I'll probably try to wrap up. Again, I hope everyone will come back tomorrow. We will pick our stocks for our watch list, look at some other possible trends tomorrow. What stocks do we want to buy to prepare for this recession? And again, please let us know what you thought of all this information. Was it helpful? What would you like to see more of, less of, etc.? In the comments, in our Discord. We have a suggestion box in our Discord you can put suggestions into, or just ping us. Also in any of our social media sites, our Facebook group, etc. And we also have this survey on our community tab on our YouTube channel as to what time's best for everybody for these weekly trading game plans on Saturday and Sunday. Last I looked, 10 a.m. was still the most popular vote, but please vote in the poll. Again, you can find these notes in the Google Drive with the link in the description box below, so you can reference all of this in the future and access these links as well. And again, let us know how we can help make these as valuable as possible for the most traders. Yep, this looks like 10 a.m. is still by far the preference, but I don't think we have a whole lot of votes. So please go vote on the poll. Let us know. We'll try to adjust accordingly. And again, let's hear your comments. Join us in the Discord. Thank you all for joining us for this live stream. And I hope you'll come back 10 a.m. tomorrow. And again, we'll compose our watch list for the week of June 27th through July 1st. So you all have a great rest of your Saturday, and we hope to see you again tomorrow. Bye.